Hey everybody, welcome back to the Crow's Nest and the Wealth Advisory's top stocks. We're on to, as you can see, November 2025. Thanksgiving's coming up here in the States. It's getting cold out there. It was a dark morning with the storm that we're having here. It really feels like winter's coming. And we had a little winter in the stock market, sort of, like over the course of the month. I have a note here to point out that my strategy of getting in big on resource stocks, especially silver and gold last month, worked out really well until it didn't. We had a big sell-off in gold. We had a big sell-off in silver. Basically, both gold and silver hit these new all-time highs. They spiked higher over the course of the month, but then traders started taking profits. Trade deals started making progress. We've got some weak hands that just sort of got in at the end and are just sort of getting out of the market because they saw a little bit of selling. And gold and silver fell into correction territory, which means they were down by more than 10% from their peak. And fortunately for you, though, I threw a defense contractor in last month, so I did have one stock that went up. And even more fortunately for you, I brought my defense expert here, and he put in 3 defense stocks that also went up last month, one of which went up a bunch, a good like 50%, give or take. Love to see those. So thank you for saving my bacon, Jason. I appreciate that. That's why we keep each other around. Like we're stronger as a team than we are individually.
Always bring a buddy.
Always bring a buddy. It's the buddy system. But you know what? We're back. We're undaunted. It was a kind of a rough month in the markets, just in general. I mean, stocks sold off, everything sold off. But then we started to see progress between the U.S. and China on trade front. We're calling it progress. I don't know. It sounds like, the difference between a truce ending a war and a ceasefire ending a war. Because, ceasefire has the suggestion that, firing could be unceased eventually. And so, basically, we've got this 1-year pause where Trump's not going to put big tariffs on China for a year, and they're going to try and help, stop getting the ingredients for fentanyl coming to the U.S., and China is going to pause their restrictions on rare earth metals for a year so the world can continue to build things and have technology, which is great. But, in a year, we're going to have to renegotiate this. And basically, they're sort of saying that every year going forward, we're going to have to renegotiate this. So I don't know how this works out super well. We saw a big sell-off in critical minerals and rare earth metal stocks. And I really think that's overdone. I think that's ill-advised because this is a long-term thing, right? Yeah, China is going to let us keep getting rare earth metals for a year, but if they decide after this year that they don't want to give them to us, well, we still need those for our cars, for our cell phones, for our laptops, for all of the missiles that our defense contractors make, for a lot of our defense systems. These are really, there's a reason they call them critical. They are very critical. So, we need them. We're going to continue to try and diversify away from China. This is sort of kicking the can down the road, in my opinion. But anyway, that all being said, I'll get into more of that as we go into the picks. But yeah, that all being said, we had an okay month. Gold and silver are starting to recover a little bit. I like to see that. They seem to have found some support down there. All of the macro drivers of that rally are still there. Debasement, geopolitical tension, inflation, rate cuts, weak dollar, all of these things are still there. A trade deal doesn't change that. We're going to see this rally come back. So I just want everybody to really be aware of that, and that's where we stand there. We're still pretty bullish on the precious metals. We think everybody should be buying the dip in those. And with that, let's go ahead and actually get into the list, tell you what our picks are this month. Before we do, I just want to point out, as I always do, that we're going to run through our first 4 picks, and then we're going to cut things off. For those of you watching on YouTube, this is a service that we provide for our paying subscribers to the Crow's Nest and the Wealth Advisory. We don't think it would be fair to give away something for free that they pay for access to, but we've worked out a bundle that would make even Comcast jealous, where you can pay one discounted price and get access to both the Crow's Nest and the Wealth Advisory. Honestly, it's the best deal that you could probably ever have. The return on your investment is pretty high with our stocks. We've got some great ones out there. We've got some stocks that are up 100% this year. You know, like I said, Jason had one top 10 pick that was up 50% last month. So, I mean, that would have paid for both of your subscriptions. Highly recommend you get one. If you don't, though, that's okay. We won't hold it against you. We'll keep putting these 4 picks out for as long as you want to watch. All we ask is that you subscribe to the channel, hit the bell to make sure you're notified when we post new content, and give us a thumbs up or drop a comment, you know, to let us know that you're watching. And with that, let's go ahead and get into it with my first pick, which is a stock that had a rough start to the month, but really blew up at the end. It's Broadcom. Ticker symbol for that is AVGO, because Avago and Broadcom merged a long time ago, and we kept Broadcom's name and Avago's ticker symbol just to, you know, confuse everybody, yes. I guess, or so that everybody could feel like it was a merger of equals. You know, you got to do it that way. But anyway, you know, in the year since we've added Broadcom to the model portfolio, we added this one about I want to say September of 2024. It's returned more than 130% for us. But with Citigroup forecasting that AI compute demand will translate to an estimated $1.4 trillion in incremental AI-related spend in the U.S. alone by 2030. So that's over the next, 4 years, $1.4 trillion in AI-related spend. Basically, these the hyperscalers, the Googles, the Apples, the Amazons, the Metas, they're spending tons of money on AI, and companies like Broadcom, NVIDIA, AMD are getting that money. You know, Broadcom has done really well. It looks like their chips are going to play a very big role in the architecture and the infrastructure of AI here in the U.S. And it really appears that the best is yet to come for this stock. JP Morgan agrees. They suggested that it's not a stretch to see Broadcom generate $100 billion or more in AI revenue in 2027. So we're going out 2 years there. $100 billion and more in just AI revenue. That's on top of all the other revenue that they're bringing in for, you know, their regular technology. It's huge. We're talking about, you know, it's buoyed. It's got a recent deal with OpenAI. There's just still a lot of profit to be had in this AI trade. Broadcom is going to get a lot of it. Investors in Broadcom are going to be very well rewarded, and I would like everybody to have a position. So my first pick for the month, Broadcom, ticker symbol AVGO. Let's pass this over to Jason and see what he's got. It's another good one.
Yeah.
These companies.
This is, let's see it. There it is, Verizon, VZ. Boom. Very simple. I probably don't have to really explain what Verizon does. It is the largest wireless carrier in the United States. But it is also a low-key turnaround play, which I love. One of the issues with Verizon is it's lagged its peers a little bit. You're talking about Apple and you're talking about T-Mobile. But I think the turnaround is going to come. It's been hemorrhaging subscribers, but the income, the revenue, the business has been doing pretty well. And to that point, they just reported earnings. Stock popped 4% on it because they beat earnings estimates. EPS came in at $1.21 per share. That beat by about 2 cents, which isn't the biggest beat in the world, but it is nonetheless a beat. And the big thing about Verizon is they pay a 7% or near 7% dividend yield. This is a stock that over the past few months has lost a little bit of momentum. It's dropped down under $40. And when that happens, the dividend yield goes from about 6.5% to closer to 7%. It has actually gone past 7 at a few points. And what that means is you're basically getting paid a nice juicy dividend to wait for this turnaround play to materialize. And you're going to get that because in addition to the earnings, one of the reasons the stock went up is because they also just replaced their CEO. It's now Dan Schulman, who used to be the CEO of PayPal. He has a great track record of generating subscriber growth. He is basically signaling a lot of new growth strategies, being more aggressive, getting back in there, improving that subscriber base that it's kind of let deteriorate over the past year or so. So like I said, I like the turnaround effort at play here with Verizon. New CEO, sturdy business, resistant to tariffs, resistant to recession. If there is an economic downturn, people typically do not get rid of their cell phone carriers. You do still need service. Even if you aren't buying a new cell phone, you want to keep your plan. So I like Verizon long term. I think this is a good spot to get in. You get the high yield, and you're going to get exposure to a play that I think has some legs, especially if the new CEO can turn things around. So that's where we're going here with Verizon.
I like it. It's a good one. Used to be Bell Atlantic Mobile. Blows my mind.
I think my grandmother worked for them, so I think
Yeah.
she still collects a pension.
Old Ma Bell. Love it. Yeah, that's an old one and a good one. I love Verizon. Coming up next, this one is it's a much smaller stock than the last two that we've given you. And it's actually one of the only ones that I'm going to give you this month that was not up in October. It was up at the beginning of October. It was up in the middle of October, but then gold and silver prices took a hit and it tumbled. And it's Apollo Silver Corp, ticker symbol. I'm going to give you the OTC ticker because it trades over the counter here on the OTC QB in the U.S. under APGOF. If you are able to trade Canadian stocks, it trades APGO.B on the TSX Venture. Either way, you can pick up the shares. I highly recommend you do. Like I said, this is one of the only picks that I've got this month that wasn't up in October. It was on its way there before the bottom fell out of gold and silver prices. But as gold and silver prices have bounced back, so has the stock price. It was up 12% the day before we came in to film this. But the thing is that it's still down by a good 20 or so percent from where it was before prices started falling in the silver market. Silver prices, like I said, gold and silver, they barely cracked a correction, 10% down, but this stock's down 20%. We have a very good opportunity to buy this while it's low, and then basically ride it back up to where it was as gold and silver prices, regain their rally and continue to move up the charts. This is a really good one. I like this stock a lot. You guys have obviously, I'm sure, noticed that. They have one of the biggest undeveloped silver deposits in the United States. It's actually one of the biggest in North America, out in California. It's in a very mining-friendly jurisdiction in California, out near Barstow, where basically back in the 1800s, that was where the majority of the U.S.'s silver was produced. And so, all the silver coins, we sent the silver basically straight from Barstow down to the mint in San Francisco, or up to the mint in San Francisco, and made a whole bunch of coins with it, and really drove the U.S. economy. That silver is still there. It's still accessible, and with the technology that we have now, it's actually easier to get to. Apollo hopes to do that. They keep expanding the resource there. It started, when I first started covering the company, it was 110 million inferred and indicated. Now I want to say it's up to 160 million. Don't quote me there. It could be 140 million. Either way, they're expanding it. They are adding millions and millions of ounces to this resource estimate. And that is a really good thing. That, I think, is going to bring in a bigger company to buy them out, maybe like a Pan American Silver or something like that. So I really like this one. I think we've got an opportunity to buy it on the dip, and I think everybody should have at least a small position in Apollo Silver. All right, and now for Jason's second pick here, and then we'll do a little recap.
Here we go.
All right, another red one. I like this.
Yeah, you know what? There's kind of a theme here, to be honest. I didn't plan it this way, but sometimes it just works out that way. This one does kind of dovetail with Verizon a little bit in that it is another very sturdy, but also turnaround resurgent play. When I first recommended a Wells Fargo, it was coming off an issue where they had federal regulations placed on them because of a scandal that broke back, about 5 or 6 years ago, where they were making fraudulent accounts, as we all might remember. So they got in trouble for that, and then they got sanctioned by the Federal Reserve, and then earlier this year they finally got to get those sanctions off, and now that they are no longer capped at $2 trillion in assets, they are hiring investment bankers, they're putting their business back together, and they couldn't pick a better time to do it, because all of the volatility, all of the liquidity that we're getting right now, especially now with the Fed cutting rates, that's going to mean leasing or loaning money at a lower rate, but also loaning more money at a higher volume at a lower rate, so you can make that up with all this money sloshing around the economy. And the financials have done outstanding. That's another thing, like I talked about, the Trump administration, laxer regulations on financial institutions. They take the handcuffs off. These guys are free to trade, again, against all this volatility that we're seeing, whether it's broader macro stuff with tariffs and that kind of uncertainty or whatever, unemployment or whatever these figures and inflation data is coming on, they are betting and hedging against it, and they are making money on that. The precious metals market, they are putting money and taking money in on that. They are riding these waves, and financials are absolutely killing it right now. And Wells Fargo is going to ride that wave, and they're coming back up, like I said, now that they've kind of unleashed the federal restrictions on them. We got earnings, 6% increase in total revenue, 14% increase in net income, 22% increase in earnings per share. Also just reaffirmed its dividend of 45 cents per share. So again, like Verizon, when you're watching these turnaround plays materialize, we're talking about steady, recession-resistant, tariff-resistant businesses that we all know are household names and that have a lot of upside and potential there, but you're also getting that dividend while you wait for that to materialize. And I believe, again, for both these companies that's happening. Certainly in the financial sector, we're seeing it. It's not just Wells Fargo, Citibank, Morgan Stanley, Goldman Sachs. They all reported blockbuster earnings this quarter. You're going to see that. If you're thinking like, oh, the market's volatile, precious metals are volatile, the dollar is losing value, well, guess who is actually making the most of that? Is the investment banks that have the inside track on all of this stuff. So you can always just put your money in them and let them take care of that for you. And that's where we are with Wells Fargo.
I love this one. I think this was such a great addition to the portfolio there. When you put it in, I mean, it's a turnaround play.
It's up 2.5% in the past month, but 12% in the past 2 weeks, and 22% year to date. So the stock is gaining, and it's gonna keep gaining.
I think you're right. I think we've got a good list for you guys here, so let's go ahead and do a little recap for the folks watching on YouTube, and then we're going to cut things off and finish off the list with our paying subscribers. Like I said, if you want to become one of those, though, just click the link in the description below the video. We'll set you up with a discounted membership to both newsletters, and you'll get far more than just the top stocks. You'll get monthly recommendations, weekly updates, access to all the reports we've ever written, just great analysis. It's well worth the money. I highly recommend you do it. But like I said, always, if you decide not to, we'll keep putting these out. Just keep watching them, subscribe to the channel, give us a thumbs up, and hit that bell. And with that, let's recap these stocks, and then everybody can get back to their business. All right, first up, Broadcom Inc. Like I said, guys, the hyperscalers are spending more money. Meta, Microsoft, and Google all reported earnings the evening before we recorded this episode, and all three of them said we need to spend more money on AI. They're already spending tens of billions of dollars on AI, and they all said we need to spend more. Broadcom, NVIDIA, AMD, these are the companies that are going to get that money.
Yeah, Verizon, the big thing to hone in on here is the yield, again, near 7% if you're looking for income, sturdy business, recession-resistant, tariff-resistant. And if Dan Schulman really does follow through on these plans and taking over as CEO and gets more aggressive, and they stop the bleeding on, losing subscribers and start picking up more, then you're really going to see the capital gains too.
All right. Next up, Apollo Silver. Guys, again, this is a small one. It's pretty speculative, so, I don't want people putting way too much money into it, but it's a great company. They've got great assets. They have sold off far more than the price of silver did, and they should rebound as the price of silver rebounds too.
Wells Fargo, financials, again, thriving on volatility, thriving on liquidity. Wells Fargo, with the handcuffs off, they've got probably the most upside of any investment bank, of any of the major investment institutions in the United States, simply because they are coming off these restrictions.
All right, folks, there you have it. I think we've got a good first four stocks there. So for those of you watching on YouTube, as always, thank you for watching. We hope you enjoy it as much as we enjoy making it. We also hope that we'll see your names on our list when we send out this video later on. Like I said, click the link in the description below the video, and you can get a discounted membership, a bundle to both the Crow's Nest and the Wealth Advisory. You get access to both Jason and me, our teams, all of our analysis, all of our research, all of our stock picks, a whole lot more than just the top stocks list. I highly recommend it, but obviously I'm a little bit biased. And if you decide not to take my advice, that's okay. We will not hold it against you. We'll keep putting these out. Just keep watching, subscribe to the channel, hit the bell to make sure you get notified when we post new stuff, and give us a thumbs up or drop a comment to let us know you're there. All right, folks, have a great month. Happy Thanksgiving to everybody in the States. We'll see you next time.